Good day. I hope you guys are doing good. So in this lesson, we're going to be talking about time frames. So I'm just going to be like showing you guys what I was talking about on the previous video, where I say every 4 hour and you can list comes up, and then every 1 hour and you can list comes up, every 15 minutes and you can list comes up, sorry, every 5 minutes and you can list comes up, right? So just want to quickly go through that. So let me just quickly get my error. So on the left hand side, we have a 4 hour chart, which looks very simple. The market is going up and then it's going down and then pushes up, right? So on 4 hour, things takes time. So structure takes time to present itself, because now we need to wait for we need to wait 4 hours to get a candlestick to print out, right? Like we need to get a 4 hour. We need to wait 4 hour at least for one candlestick to be there to show up, you know, and like clearly like to exactly show where the direction of the market is going, right? Whereas on 1 hour, you will need to wait only 1 hour to see the data. So meaning that the data on the left is the same data on the right? So what you're seeing here is the same as what you're seeing here. It's just that now on 1 hour, if a new candlestick comes up, right? We don't wait 4 hours, we just wait 1 hour and then a new candlestick comes up, right? And so on. So on 1 hour, you can see that the market is pushing up and pushing down. Like structure has been printed nicely, right? It's easy to identify. It's easy to identify structure on 1 hour, right? Because now we need to wait less time than 4 hour. But then on 4 hour, we need to wait longer so that we can see where the market is going, right? So, and then the other thing is that on 4 hour, if you're going to be trading on 4 hour, that means your stop loss might be big than on 1 hour. So there are going to be things like that. So this is how this market looks on 4 hour. And then when you go to 1 hour time frame, this is how the market is going to look like, right? So for example, let me quickly show you this. Can you see this, the market pushed up, and then we have this area here. We press, feel it to break, and then it dropped, right? And then same thing here, where we got this area, we press, failed to break, and then we push up, right? But if you look at the side, the market went there, and then we have about 4 rejections showing us that price can break this area, and then price came down, came back, and then still reject from there, and then we drop, right? So in this, on this side, we only have one candlestick and this one, and then the market dropped, right? So here, this week is visible on 1 hour, is this area here, right? So when price opened here and then spiked up, and before it continued to the downside, is this area here where price opened, candlestick open, and then we hit another one pushing down, right? And then we hit another one pushing down. So let me just quickly show you again. Sorry about this. There you go. And then we drop, right? So it's this area here. That's what happened. And then we drop, right? And then this drop here is this area, is this week, right? This area here is this week. So this is how this market went, right? This is how this market went. And then this area here is this area here. And then this area here is this area here, right? And then price, this area here, price dropped, which is this area there. And then this one here is this one there. And then this one there, it's this one there. So here you can see that price went up, came down, and then we went. And then we started rejecting here, open, close, open, close, and then we have this push, which is this one here, this area here, and then wait, or this open, this one here, and then we drop, and then this area is this one here, and then we push back up, right? And then we push back up. So here it went like this. And then it came back, and then we went up, right? So on 1 hour, it's much clearer. We're seeing what's happening. We're seeing that we have a price rejecting there. We have a price rejecting there. We see that we broke the lows. We see that we have a lower low. We see that we have a lower high. We see that the market came and then we broke this low again. Can you see that on 1 hour? It's like you can see what's going on 1 hour. You can see what's going on, and then the candlestick are printed like earlier than on 4 hour, so you don't have to wait long time to see what structure the market is showing you. And then what else? Um, you don't wait long to take trades. Yeah, you don't wait long to take trades. And then that's it on 4 hour. So what you're seeing on the right is what you're seeing on the left. Oh, sorry, what you're seeing on the left is what you're seeing on the right. Right? This is the same structure what that's on the left. Nothing changed, right? So I'm gonna quickly show you now how I showed you how this looks on 4 hour. I'm gonna show you how, so this is how it looks on 1 hour. I'm going to show you how it looks on 15 minutes. So this is 15 minutes, right? So you can just go back, and then I want us to focus on this area here, right? And then I want us to focus on this area here and this area, which is this one here and this. So now let's go back to 4 hour, sorry, to 15 minutes. So on 15 minutes, this is that area. And then we have this area. And then we have this. Oh, sorry. There we go. Just get my drawings. There. So can you see now what we were seeing on 1 hour? On 1 hour, what we're seeing is that price is pushing up. We can see price pushing up on 1 hour, right? You can see it's pushing back up. But then on 15, we can see that price is doing what? And then it went up, and then we have too much rejections here, and then it did this, and then it went up, and then it moved, and then we have a area where the market rejected, and then we pushed, and then we started rejecting here, so the rejecting here, and then we dropped, and then went back up, and then we fell, right? And then we push back up, and then we have this rejection area again, right? Can you see that what we saw is one candlestick on 4 hour, and then what we saw is 4 candlesticks on 1 hour? It's what now we're seeing on 15 minutes, which is like a lot of candlestick rejecting in one area, right? And then we see price pushing down, and then we see also a lot of candlesticks rejecting in one area here, and then pushes down, right? So this area is quickly delete this area on 1 hour is just 1 week. It's it's only 1 week that spiked up, right? Let me just quickly go back. No, there's two, sorry. Okay, it's only 1 on 4 hour. So this is what we are looking at. Can you see there? Now it's a lot on 15 minutes. So the lower the time frame you go, the messier things are, but then you get an advantage to do what? To enter the trades early, right? Things are messy, which is they are clear, but they're too messy, right? They're not that clean to take trades. Things are messy, you can get misled easily, right? So you are gonna learn that along the way. Why I say you can get misled easily on lower time frame. But for now, I just want you to understand the difference between all these time frames. So here you can see just that sorry, I just wanna get, yeah, here you can see that it's just price pushing up, right? That we can see. And then we have this area pushing down, and then we had price pushing up. On this side, we can see it's price pushing up, spiking up and down, and then it drops, right? But then on 15 minutes, we can see it's price pushing up, down, up, down, and then we have price pushing up, right? So I want you guys to see now, this is what is happening on 4 hour, right? And then this is what is happening on 1 hour. And then this is what is happening on 15 minutes, right? So what you see as a straight market bullish, what you see as a straight is a bullish market on 4 hour. Just know that when you get to 1 hour, it will look different than what it is on 4 hour. So you need to be able to identify that, right? And then when you go to 15 minutes, it's going to be even worse, right? When you get there. But you need to stick to what you saw on 4 hour so that you can be able to catch your trades, right? So now let's go to 5 minutes just to show you what's how it looks. And then when you go to 5 minutes, this is what we get. Check there. This is what we get. And then let me just clean this one. Just redraw it. So this is 4 hour. And this is 1 hour. And this is 15. And then here we have 5 minutes. There you go. So you need to be able to identify this. So this is 4 hour. The market is simply just moving to the upside and then we drop, right? And then when you get 1 hour, things don't look the same as in 4 hour, but then you're gonna be able to identify direction of where it's going, right? So when you go to 15 minutes, whatever you saw on these two time frame needs to be the same on with what you're seeing, right? Because now on 15-minute, things change quickly, right? Here you can see that the market is going to take time to print its structure, going up, going down, right? It's gonna take time to print its structure, right? And then on 1 hour, it's happening quicker than on 4 hour, which you can see it already here, which is around these areas. And then when you get to 15-minute, it only takes 2 hours to print something like this, right? Which is enough to see where price is going on 15-minute. That's why I'm saying that on 15-minute things are gonna change quickly. So you need to keep in mind that what I saw on 4 hour is what I'm seeing on 1 hour is what I'm seeing on 15-minute. If it's not happening now, you need to wait until it's printed out, right? So let's just quickly show you. So as you can see now, sorry, as you can see, this is as simple as how I can explain this time frame. Is that what you see on 4 hour, it looks clean than what you will see on the lower time frame, right? And then on higher time frame, you wait longer than the lower time frames, right? And then what else did I mention? So the lower time frame you go, the messier things are, but the easier it's gonna be for you to catch trades, right? So you need to train your mind to be able to identify this on 4 hour and be able to take advantage of it on 1 hour or on 15-minute, around here, there, right there. Right. And then to make it even worse, you go even to 5-minute, right? So just know that nothing changed. This is still the same structure that you saw on 4 hour. It's just that now candles are being broken down to smaller they've been broken down, and then like each candlestick is formed after 5 minutes. So meaning that it will move 5 minutes in one place, and then that candlestick, if it closes within 5 minutes, it's going to be there, right? And then the other one opens, and so on and so on. So that's why 5 minutes is messier than 15-minute and 1 hour and 4 hour. So this is just a basic video on how time frame works, and then on how you can identify this. So train your mind to be able to read 4 hour and then interpret 4 hour into 1 hour, 15 and 5 minutes, right? So I'm gonna catch you guys in the next one. Cheers.